Hello and welcome to All Talk with Cafemutual. I'm Ridhima Bhatnagar. Today we have here with us Gaurav Puri, who is the CIO of NCW Asset Management. Hello, sir. Pleasure to have you on the show.
Thank you, Gaurav.
So, sir, I want to start by asking you that equity and debt PMS are similar to mutual funds. Then, why do you think an investor should look at this category for diversification in their portfolio?
So essentially, if you look at large money managers across, right, if you take the Blackstones of the world, Brookfields of the world, or PAG even, the stock allocation matrix for them essentially consists of three parts: equities, debt, and commercial real estate. Commercial real estate sits between the gamuts of debt, which is extremely stable, low returns, equity, which is high returns, higher volatility. So commercial real estate kind of straddles the mid segment between them, which is lower volatility, better than debt returns, and that's where kind of the asset allocation makes settle.
What are the popular PMS strategies as of now?
From our perspective, I think long short PMSs are extremely popular. On the listed side, there are REITs as well as AIF side. We have real estate AIFs, which are extremely popular.
So, there are so many strategies in PMS. How does a wealth manager decide which strategy to choose for their clients?
So I think India is at an interesting stage where both equity, hybrid, real estate, alternative asset classes have lent themselves to the PMS industry quite well. From a manager's perspective, it's about mapping out risk adjusted returns. So a lot of clients will have higher risk taking capabilities and higher return requirements, and then you'll have the contra clients, right? So from a fund manager's perspective, it's about marrying the right risk return curve to particular client segment, and that's how we operate.
What are the opportunities for wealth distributors in PMS distribution?
I think it's a large market. Wealth in our country is kind of exponentially growing, and we are on the cusp of a very high growth momentum over the next 5 to 10 years. Distributors serve both as engagement managers and relationship managers for the customers as well as product selectors from a manufacturer's perspective. So I think there are immense opportunities for them to grow if they do the right thing.
With overall 25% increase in STGC and LTCG, uh, the space has become slightly, the equity PMS especially has become little, unattractive for the investor. Whereas the debt PMS with the listed bonds has become slightly better. So, what is your overall view on this aspect?
I think both these kind of in the shorter term, of course, there are impacts of both STCG and LTCG as from an investor's point of view. But if you see the overall direction that the government is taking is towards a very simplified taxation structure. And I think over the longer term, stability in taxation policies will significantly improve the attractiveness of this segment. Also, typically, lower churn managers will see their returns kind of going up given how the taxation currently behaves.
So, that was all. Thank you so much. That was all from this session. Thank you.